Hey, what's going on, cash flow hackers? It's Chris with Life 180, and for this video, I want to talk to you about why you want to get out of the stock market right now and the indicator that I just found that basically inevitably tells me that it's not a matter of if, it's a matter of when we're going to have this stock market correction and how significant this correction is potentially going to be. So let's get into this. First and foremost, I'm just going to dive right into what I'm talking about here. And so what I found, the indicator that I found is actually that the PE ratios right now are higher than historically they've pretty much ever been. And now what I want to do, before I get into the details about what's going on right now, I want to kind of go back to 2020, the beginning of COVID. So when you look at PE ratios in 2020, they were actually over 24 times earnings. Now, if you think about what happened in 2020, they skyrocketed up because think about it. Remember, the economy shut down, businesses shut down. So what happened is revenue numbers collapsed, but because of the fact that companies were propped up by stimulus money, it made it so the ratio of the earnings per share, so the cost of the shares stayed here and the earnings of the shares went down here, so the ratio went high. Now what's crazy about this though is that in 2021 the S&P 500 ended at 26 times earnings, which is actually an increase in the PE ratios across the board. Now, in 2021, it's also important to note that the S&P gained actually nearly 27%, which is absolutely crazy considering the fact that we are coming off an already overpriced market. So when you break that down, it's important to understand kind of how this all factors together, right? So PE ratios, but I want to get into this. I want to explain kind of what this is. PE ratios are an important indicator of the actual value of the market based on production, right? So extremely high price to earnings ratios indicates that there's a higher amount of speculation or that stocks are actually overvalued right now because the production and the value isn't backing up what people are actually paying for the stock. So to me, that tells me that there's a higher level of speculation. So throughout history, it's important to understand history to understand what we're going through right now. So throughout history, the average PE ratio is normally in the market somewhere between 13 to 15 times earnings, right? So when you take that into consideration, what that's telling me is that the stock market is about 100% overpriced right now. Because remember, we're about 26%. So if it's 13 times ratio is average, somewhere in that ratio, we're about 100% overpriced right now, meaning that unless the actual production and value creation by these companies in the S&P increases by 100%, history says that we're in for about a 50% market correction. Now, I don't know about you, but I don't want to have my money tied up in the market when this is all going to go down, right? Like I've done a lot of videos on this, and just as a side note, if you want to know what I think you should do with this money and what I think you should do with your money to protect it, to prepare you for more opportunity, what I do, I call it giving yourself more security, guarantees, opportunity, and control with your money. I suggest that you hit the subscribe button, click that bell, that way you get notified every time I launch a new video because we've got a lot of content that comes out about this. So let's get back to the topic here at hand though. I want to go through a little bit of history because I think when we understand history and we understand what was going on in the world, it's such a huge education component to giving us the information we need to understand why this PE ratio plays so big into this. So let's go back. If we look at the highest PE ratio ever that existed in this country, it was 1999, right? That is the year that PE ratios in the S&P 500 were at 29 times earnings. Now, if you go back to 1999, if you remember right, that was right at the dot-com bubble, right? That was right before the dot-com bubble. Everything was massively overinflated. There was so much speculation going on. And it was then that the NASDAQ collapsed 80%, right? So a lot of that, it just goes to show we're at risk for that right now. Now, if we go way back to 1933, I think it's important to note that the biggest gain that we've ever had in the stock market was 54% in 1 year. 1933, that happened. If you recall, that was coming out of the Great Depression, right? And at that point in time, price to earning ratios were actually at 14 times earnings, right? So that even in a huge gain, even when the market is going up like crazy, the PE ratio stayed at about 14, right? In 1954, that was the second biggest rise, and that was at 52.5% of an increase in the stock market. But even then, that was right after the Korean War. So you could tell these are all coming after, significant world kind of circumstances, especially back then. The price to earnings ratio at that point in time was 12 and a half times earnings. So I give you the first and second biggest years. 1958 was actually the fourth largest year, right? So when you think about it and look back at this, 1958, the last one I gave you was 1954. 1958 was the fourth largest recovery, and that was actually because after the big boom in 1954, we went into a pretty severe recession. And in 1958, what that allowed us to do is go to a 43% gain in the market, and PE ratios got really high for back then, which was historically high, at 18.75, so 18 and 3/4 earnings to price, right? So like when you break that down, it just goes to show that right now in our economy, in our market, the numbers in the stock market, it is oversold, it is overly speculated on, and the stock market is just a bubble, right? Because if you think about it, and this is a big reason, you should never invest in anything you don't understand. I'm a big believer in that. I say it all the time. And what I'll say to that is, when you look at the market right now, it's not a matter of if, it's a matter of when it's going to correct. And when you look at these numbers and you look at history and you look at the fact that history has a habit of repeating itself, and you look at the fact that, when you look at the PE ratios right now at 26x, right? Like you think about those numbers and you realize this is so out of skew right now. It's impossible to hold the market at the value that it is right now unless production increases. And I don't know about you, but you look around and production isn't getting any better. Supply chains are messed up. The numbers that are happening as far as the value creation in this world is all out of whack. We're still worried about lockdowns. We're still worried about all these different things. So if you look at back in 2008, 2009, how the government actually propped up major banks, major corporations by bailing them out, right? It was the kind of the beginning, not really the beginning because it's been happening in smaller ways, but the most overt first example and instance that the government basically said, we don't care about Main Street, we care about Wall Street, we care about propping up these big corporations. And what that did was effectively shrink the middle class and made the wealthy get wealthier, right? And so we're in a position right now that even since that point in time, you look at the PE ratios over the last decade, they haven't gone as out of whack as they are right now. And so this is it's a value thing, right? Like, we don't need to make this any more complicated than it needs to get. I think historically speaking, there are all sorts of people that can talk about all these different, investment nuances, and they could try to excuse away. But what I know is I look at history and I look at when the market goes up and how it performs. The crazy part about what we have right now to really understand is that the market in 2021 went from 24x earnings to 26x earnings, and it went up almost 27% on an already high market. And when you look at those dynamics, it's okay if the market goes up, but when the market goes up that high and the PE ratio goes high from an already near all-time high, that's a really scary indicator. That tells me that this bubble is getting bigger and bigger and bigger, and potentially bigger than any bubble we've ever had before, right? Because of why this bubble has grown the way it has. There's been nothing to do except for printed money, stimulus, speculation, and it's a matter of time before it pops. So if you haven't already, make sure that you put your money in a safe place. Now, once again, I said before, if you are interested in learning about what I think you should do to put your money into a place where it'll be safe, I have a video called the Life 180 Pyramid Talk that talks about how to prepare yourself, because Warren Buffett always says when the economy struggles, when there's blood in the streets, that's when you need to be trying to take advantage of opportunity, right? Make money when there's blood in the streets. And so when you think about that, when most people are going to be struggling through this, that's going to create a lot of opportunity for a segment of people that want to position themselves to take advantage of it. Listen, if you've got your money in the market right now, consider yourself fortunate. You've rode the market up through the greatest bull run of all time, and now the market, I don't care what anybody is telling you, the market is just glaring and just blasting like a siren at you, telling you, hey, this is going to go negative. This is going to get bad. We don't know when. I'm not going to tell you and try to say I can time the market. But at this point in time, with PE ratios that high, they can't get much higher. So that tells me, historically saying it's near this breaking point. So, how much higher can the market go, right? I don't really see it going that much higher. So the upside potential doesn't warrant the downside risk of having your money exposed in the market right now. That's just how I take it. So I would say do what you have to do to get your money in a safe place, and check out, subscribe, watch our other videos on this topic, watch the Life 180 Pyramid video. And if you have any questions, comment in the comment section below. I will do my best to engage with every comment that I can. Until next video, hope you found value in this. Go out, have a blessed, inspirational day, and we'll talk soon. See ya.